Hello, welcome Forex traders. Steve here with tradingforexforprofit.com, and today we are looking at the CAD yen on the 4-hour time frame. I've opened a buy order. Actually, what I've done is today is August 28th, 2014. I actually opened a pending order yesterday, a buy limit following this signal right here. Okay, the pattern completes, the break check pattern, and the signal is the engulfing signal right here. Okay, so let me walk you through what I did step by step. I'm a little late getting started on recording this. I was going to do the recording yesterday. I ran out of time, so I'm doing it now. It has taken the entry, so I thought I'd better hurry before we bust through the 2 times profit, which is what I'm hoping. I'm an optimist. I'm hoping it's going to happen. Okay, so speak it in, it will happen. Okay, so here's the bounce, establishing a resistance level. Okay, we move back to this level. We break through on a candle that is equal to or larger than the candles that preceded that candle in the move of the direction that we're going, which is up. So you look back at all the candles in the up move here, and the majority of them, it looks like it's equal to or greater than. So that is considered a break, which validates this level as being a valid level. That's how come we want that candle that breaks out to be large, equal to or larger, so that we can show that what it does is it shows momentum in the market. It shows a lot of traders are at this level going long, okay, because the force at which it goes through is equal to or more than all the force leading up to it. We kind of meander up to this level and then we break through. Okay, that's what we're looking for. In this case, it just broke through with a candle that was larger than several, but there was a couple larger ones. But that's okay because they're in the same direction as the move. All right, so then what happens next is we break through the level. The check is the signal that follows, and that's what we enter on. Okay, the market pulls back to this level as if it's going to move back inside and continue down. That is quickly countered with a bullish move engulfing this level. Okay, so this level is rejected right here with this engulfing. Let me actually move this over right here. Okay, here's your engulfing signal. Now the entry is on a pullback. So what I did was, of course, you put your stop loss 5 pips below the signal, which is the engulfing signal, the black and the white candle. Okay, so the lowest point of the black candle is where your stop goes 5 pips below. Let me zoom out, and I went back and determined that this was the next high right here. Okay, so that's a possible resistance point. And to be more safe, I looked at this little bounce and this stall as an area of potential resistance. So that's where I wanted to keep my 2 times profit target near or below in this case. So what I did was I took the Fibonacci tool and I put the stationary, the given is the stop loss, that's 5 pips below, and I set my entry and I drug this until I got my 2 times profit where I want it, and that is the entry, this level right here, 95.33. Okay, so I set a pending buy limit order to enter the market at 95.33 with a stop loss at 95.12 and the 2 times profit right here at 95.76. Now with the spread, it kind of offset a little. You're going to be within a few pips. That's all that matters. Okay, we're not. It's not rocket science. It doesn't have to be that precision. We're talking about a few pips. Not a big deal. Okay, so there you have it. There's the entry. A few candles ago, the market pulls back, retests the signal, and taking my entry, and now hopefully off to the upside we go. Alright, so we're going to pause the video, come back to it later, and continue with our explanation. Okay, our 2 times profit target was reached right here, 2 candles before the close on Friday. What this does, let me zoom out, is emphasize to you, okay, it emphasizes the importance of a zone. Alright, let me highlight this zone. Okay, this is in fact why, this is exactly why we target a zone. Okay, we find a higher low, then we look for congestion, we try to find a zone, perhaps two bounce points, and then we take our 2 times profit target, just like we showed you earlier, and we try to keep it at the bottom in this case, the outer edge, the bottom edge of the zone, or as close to the outer zone as possible. And this is why. The high here might not be retested right now. We might see a fall back down into this level, taking out stops, okay, of traders that did exactly what we just did before a move back up. Okay, that's why it's important that you take your 2 times profit off the table. Now, a lot of traders teach that. Let me zoom in. What you should do is, at this point, set your stop loss for break even at 2 times profit. Set your stop loss at break even, and then go for 3 or 4 times profit and keep moving your stop up. That's fine and dandy. However, more often than not, just like this example, we're going to target, we're going to hit the zone, we're going to bounce back down and take the stops from the traders that did that. Now you've taken a 2 times profitable trade and you've broke even, which completely jeopardizes your strategy for the program that we teach. Okay, so if you want to learn more, we have a free trading program, and we show you all the patterns, all the signals. Just stop by the link that's in the notes below if you're watching this on YouTube, tradingforexforprofit.com, and we'll see you there.